What's up, guys? Welcome back to my channel. So one of the reasons the rich stay rich is not because they work hard. They don't just work hard. They also work smart. So what do I mean by working smart? Well, they put a lot of their money into investments, and then with the investments, they'll get what's called dividend. Dividend is an additional income in addition to their investments. So they're making money using their money. Now that's working smart. In today's video, I wanted to share with you guys how dividends work, how we can use dividends to benefit ourselves and generate some additional income, have our money work for our money, and become one of the rich. So let's get started. All right, so let's start off with the basics. What are dividends? When a company generates any sort of profit, it's also known as earnings. And when a company gets earnings, it can do one of two things. One is it can reinvest that money back into its company. So it can invest in more innovations, more new buildings, etc., etc. But that is a cash that they will need to use based on their profit earnings. Or it can do something called issuing dividends. Dividends is just a nice cash back of the company's earnings back to its investors. So anyone who is a shareholder or a stock owner in this company will be entitled to what's called a dividend, or just a nice little cash back because you own part of this company. So to clarify, who gets the distribution from the dividends? Well, anyone who is a shareholder, right? So if you own stock in Apple, for example, and Apple is saying, hey, shareholders, I'm going to give you guys a dividend. If you own any Apple stock, you will get some dividend as a reward for owning the stock in Apple. An important thing to note here is that the dividend distributions are usually done every single quarter, and they are usually in the form of cash. So that's some nice additional bonus in addition to the appreciation on your stock price. So it's a win-win for you in terms of your investment portfolio. The cash will be distributed to your trading account, and it will be there for you to use to whatever you want to do. So you might be thinking, oh wow, that's great. If I buy a share of Apple, I could just get a lot of dollars of additional cash whenever Apple doesn't feel like investing back into the company. Perfect. When do I get this money? Well, great question. So dividends generally are declared by the company, and they are formalized in terms of the dollar amount that every single shareholder, so every single stock, is entitled to during their quarterly earnings call. On these quarterly earnings calls, the company will discuss a lot of important information like how is our company doing in terms of finances, how is our operations, how are we doing internationally, how are the competitors doing. So a lot of important information is discussed there, and as part of that discussion, they'll say, oh, by the way, shareholders, we're also deciding that we're going to give you a dividend for this quarter. So because the dividends are usually declared quarterly, that means that every single year you'll get 4 dividends. So that is on a quarterly basis, roughly every single 3 months. An important thing to note here is the companies may not always be issuing quarterly dividends. So rather than getting dividends 4 times a year, you might be getting it 2 times a year or 1 time a year. But the most common is companies that issue dividends 4 times a year. So that's sort of the market practice. Let me give you an example. So say that Apple, continue with Apple because it's my favorite stock, just kidding, even though I own like a bunch of Apple devices. Apple, for example, just declared a quarterly dividend of $1 per share. So what that means is if I own 1 stock in Apple, I get $1. But if I own 5, 10, 100, 2,000 shares of Apple, that 2,000 times 1, that's $2,000 of just dividend income. So it could really be a nice little boost to your investment portfolio. So dividends are often associated with the signal of a healthy company because they are saying that, oh, we're going to give the dividends as a cash back to the shareholders because we have a steady enough cash flow to be able to support this sort of distribution to our shareholders. So usually you like to see a company with a healthy amount of dividends, although that's not always the case. So look at a lot of other aspects as well. So like the financials, the operating, we'll cover this in future videos. But for the purpose of a dividend, an important number that you may come across as you're evaluating different stocks is something called a dividend yield. Now, what is a dividend yield? The dividend yield is just a simple equation to look at how much percentage on a percentage of its stock price is the company actually issuing for the investors in terms of dividends. So let's continue with an example. With Apple, for example, say they're issuing $1 of dividend every single quarter. So that means they're issuing $1 4 times a year. The dividend yield is how much is this company issuing on an annual basis as a percentage of my stock price. So I just Googled Apple's current stock price real fast. It's trading at around $134. And say if their dividends was $1 per quarter. So that means that I'm getting $4 per year, right? That's $1 per quarter times 4 quarters divided by $134. So roughly my Apple dividend yield is around a 3% dividend yield. You can use this dividend yield number to compare across lots of different stocks and a lot of different companies because this is a metric that's pretty standardized, and it's a good way to look at how much additional income from just the cash back that you'll get in addition to the growth of the stock price. Overall, these two components will be a big factor in driving the returns and the performance of your stock portfolio. As a stockholder or as an investor, dividend yields can be a really good way to boost and amplify the returns on your investment. So like I said, in addition to your investment stock price growth, dividends provides a additional steady cash flow back to you and also provides additional returns to your portfolio. This could be a good way to sort of diversify your portfolio across companies that may give you a lot of distribution in terms of dividends compared with companies that may have a lower dividend yield but a very high stock price growth. Both are important in constructing a healthy portfolio, which is something I can touch on in the future videos, but something to keep in mind as you're evaluating a lot of different companies. As an investor, you can also do something called a DRIP or dividend reinvestment. So rather than catching that cash and then putting it all into, like a really nice dinner or whatever, whenever you get a dividend distribution, you can reinvest that dividend back into the stock. So if I got $1 from Apple in terms of a dividend, I can just buy a partial share of Apple rather than using that money for something else. And that just means that you keep on owning more and more of that company as you're buying more stock. More stock equals more investments equal more greater returns. Quick recap. So what are dividends? Dividends are distributions that the company gives back to its shareholders or its investors as a cashback when the company makes any sort of profit. An important metric to measuring dividends is something called dividend yield. It is simply the annual dollar amount of dividends that you receive as an investor every single year divided by the current stock price. Why are dividends important? Well, dividends are important because it's a good way of generating passive income. It's a good way to get more money by having the money work for yourself and not having to do a lot of additional work. So this is called passive income. Passive income is how the rich stay rich and how the rich get richer. By using passive income, rather than you going out there and doing some sort of really hard labor or some sort of really difficult task to get the money, you're just having your money make more money for you. So it's the best of both worlds. No work involved or minimal work involved, but a lot of potential returns in the future. Thanks so much for tuning in to today's video on dividends and dividend investments. In the future videos, I'll cover a little bit more about how we can do the dividend reinvestments as well as additional information that will be helpful to becoming a successful investor. But hopefully this gave you some good starting ground in order to consider how you should start building out that portfolio and start investing in the market so that you can start generating passive income and have your money work for yourselves and think like the rich and become rich. If you like this video, please give it a like and please subscribe so you don't miss any future content from me if you haven't already. I'll talk to you guys next week. Bye.